Good morning. In this presentation, we are going to see how we can trade in MCX crude oil for this week. Before looking into that, let us see what happened last week and what we expected last week. Last week, crude market opened around 4,680, and also before that, we want to say that all this chart, that is the candlestick chart which we are viewing, is an 1 hour chart, which means that every single candlestick represents 1 hour, and these two double dotted vertical lines indicates the price opening and closing for the respective days. Whenever we are placing the cursor, you can see this is a cursor on a particular candlestick, you can see the date below that. So what happened on Monday was that you can see that is on 2nd, the market opened around 4,680. So this black color box also indicates the price opening. So what we expected is that we expected the market, that is crude market, to continue its uptrend, having 4,560 as a major support and red deciding zone. So this was our expectation on Monday and for that week. Just because you can see on Friday the market has provided a very clear bounce back, and comparing it with the international prices, we came to a conclusion that it is staying above the average, and everything favored a buying. So we expected crude to continue and stay in buying for the last week. So what happened is that after the price opening, you can see that the market went up and it went till 4,700, and it is a drop. So it couldn't sustain this 4,660, which is an intermediate support. It couldn't sustain that, and a failure pushed the market down till 4,580, and again from here the market took the pullback and closed around 4,620. So this was what happened on Monday, and on Tuesday the price opened around for the same zone, and you can see it went up and tested again this 4,660, which is an intermediate resistance. And after that, after breaking this 4,660, you can see it gave a very clear price action that pushed the market till 4,800. So it is a very huge gain in crude market last week, because it could sustain. Why this happened is that you can see, go back and see that the market closed above 4,560, and also it closed above 4,620. The most major factor that pushed the market is that on Monday the price closed, even though there was a drop, the price closed above 4,620, which is above the previous week. Always we should consider the previous week. The previous week the market is taking a clear resistance around 4,620. Since the price sustained the resistance of 4,620, it was converted into a good support that pushed the market till 4,800. It is a very clear and good gain that we had on Tuesday. But again the market came down and closed around 4,760s. So this was the zone where the market closed. And on Wednesday also the market opened more or less around the same zone. As we know, Wednesday is a holiday in the US market, so we expected a low volatility. But even then the market put something and closed around 4,000, above 4,760. That again indicates the market still is in line with the momentum. So on Thursday the market just opened above that. Again it is a very clear price action that took the market till 4,900. So it is a very good gain in crude market last week. As we expected, the market stayed in line with the trend. But after testing 4,900, you can see the level of drop down. It will happen, and this type of retracement can happen after a good profit taking in the crude market. So that pushed the market down till 4,800, and again from here the market gave a bounce back till 4,860, and the price closed around 4,820. And on Friday the price opened just below 4,820, and there is a huge drop down, and the price tested this 4,720 and closed around 4,750. And on Saturday again we saw a closing around 4,730. So this is the entire price action what happened on last week. There are few things which we should learn, and our method of going and trading and using technical analysis is based on a strategy. We put a plan and we work on that plan for a week, and we achieve targets, and we move on. So this was our clear plan for a week. As we always know, so everything trading in commodities is quite riskier, but we can put a plan and we can make that plan workable, and we can achieve it with the basics of technical analysis and also with proper money management and psychological training. So this is the type of process we are going through. But one thing is very sure, that every day is not going to be a winning day. So after reaching your targets, the point which we want to make is that you work on target, and after reaching target you don't go and bet again and again. It is called over trading. So always over trading is not going to help you. So sometimes it may help, and most of the times it may not help you. So that is the reason why we want to say is that we all know that after reaching 4,900 it is going to be a good gain. Then and using and trying to stay in the market on Friday is good, because you can use minimum exposure and try to position yourself for the next week. And also another strategy which we always say is that whenever you are going to average, try to book profit for the average lots at regular time intervals, which means that if you have booked something, if you have made some entries into 4,720, it is a major support zone, so you should have booked it around 40 or 50 points. So that will help you to minimize your loss, even if there is going to be a reversal, clear reversal. We have seen many times the market has provided a clear reversal. So it is not one time, particularly in crude and in commodities like gold, silver, which are a bit volatile. So that is a major reason we always say that once you have reached your target, just prepare yourself for the next week and stay at a major support or resistance. Apply your money management and use your exposures properly. Why we want to say is that, so few we have noticed that had taken a huge exposure, even the price has reached a good target. So it is based upon the hope. So that is a major point which we want to make, and that's all what we can do for this week. So what we can do for this week is that we need to frame some strategies and make that into a workable strategy. So when we consider the price closing, which is, you can see that it is 2 days the market has closed lower. So it is just above 4,760 and in between 4,720. And if you are a continuous and if you are a constant crude trader, you may notice one fact. Right from May, we were targeting this 4,720. Often you have noticed these zones of 4,720 and 760. So it is very clear we were targeting 4,720 for the past month and a month before as a major resistance zone, and we made a good profit in a crude market. So only the last week, now what it should imply is that it should act as a major support or resistance. And the expected opening for this week is going to play a very crucial role, because if it is going to open more or less just below 4,700, and also it will find the average zone also. So if the price is going to open below 4,700, what it implies? So it implies that the price can move down. So what we can do is that we are going to frame two possible strategies, and we are going to fine tune and make that workable based upon the price actions and the opening which you are going to face for this week. It is quite simple. So what we are trying to do is that we are trying to put something new, just because the market has reached some target zones around 4,800, because the trend, according to the trend, it is quite clear that the last week the market was clearly dominated by the buyers, but this week we don't want to take any chance. So what we are going to do is that we are going to look for the price opening. Since we are posting our presentations well before the price opening of currency and the commodity market, so rupee factor is going to play important role here. So what we are going to is that we are going to position ourselves into a different type of strategy which can be workable. So if the price is going to stay above 4,720, if it is going to stay just above 4,700, it is good for buying. So this we are going to target this 4,720 and 4,700 zone for this week. So just what we are trying to do is that we are going to pick this zone. So we are going to wait, so that if the price is going to consolidate around this zone, automatically this average will come and converge at this point. That can provide a buying momentum or selling momentum, and we can consider that as a decision points. So many times we have said why we are following this average is a trend indicator. It can identify a trend where the price is going to be, but only it will get its power when it's going to stay on a particular support or resistance. So now the indicator is staying somewhere, moving average is staying somewhere around 4670, which is not a good support or resistance. So we cannot take this average and go with the average. So what we expect is that we need to allow this average to come to a particular point to make a trend reversal and direction. So what we are trying to do is that for this week is that we are going to look at the price opening. If it is going to be above 4720 and 4700, you can go and target buying. So in order to confirm our trend, what we need is that we need some closing on Monday above 4720. That will confirm our trend. Still the market is in good line with the trend, but we need a confirmation again for this week. How it can be confirmed is that the market should put something above 4720 and it should form a pattern above 4720, and a closing above 4720 can confirm that the price has got the ability to sustain the uptrend, and it will go in line with the trend with the targets of around 4820 initially and 4920 after that. So that is our key strategy. If there is any closing below 4700, and if the price is going to take a resistance around 4720, and if there is a clear pattern formation which is possibly which can push the market down, and if there is a closing below 4700, the market can go in a reversal direction. Again it will follow and maintain a downtrend. So these are the two possible strategies. The only thing which a client or and a trader should do is that look for the price actions around this zone. And today also we don't have much major news that can impact the market very clearly, so it is going to be purely a technical move. So look for the price actions where the market is staying. Look at the price opening around 9, the market will open, currency will open, and look where the currency is trading. Compare it with the previous day's closing and the weekly closing. You will get a clear idea about that. So what we can expect is that if the price is going to close lower, sure the market will target 4620. So these are the two possible outcomes which we can project for this week, but it is always subjected to changes. How it is subjected to changes is that based upon the price action, you are going to change and modify and manage your strategy. Again we are saying that you are going to manage your strategy. So you are not going to frame so strong, put a plan, prepare a perfect trading plan, and put some money management technique, whatever funds you have in your account, and then decide which one is suitable for you. It is not every trader, every strategy is suitable for all the traders. So which one suits you, decide that and go with that, and let us see what's going to happen during the trading session, and follow this lower minute chart and identify the patterns which is going to form during the trading session. And we wish you all the best and happy trading with good luck. Take care. Bye.